Wednesday. We are super excited to have you. As you all know, Alex Savarese with Annexus is going to be joining us today, talking about the nationwide product, the annuity, the income rider, the new bonuses, and all that fun stuff. But before we do, and before he joins us, we're going to get started with our infamous Tim O'Rourke. Tim always comes on. He does our Tim Talks on WhatsApp every day and gives us the beat of the world and what's happening in the market. And every Wednesday we start this call with his, understanding of what's happening in the world right now. So Tim, thanks for joining us today. And I would love for you to get us started.
Great. Joy to be here. Hey, everybody. Good morning, good afternoon, wherever you are. Good to see everyone. It's always a pleasure to be here. Again, just to reiterate some of the things I talk about, if you read my Tim Talks comments on a daily basis, there's a lot going on in our world that you need to be aware of that I think it helps explain our world, what we do, and it's like it brings everything together for how important is with people and how we help families basically protect families and their wealth. And so the reason I focus so much on some of the basics of what's going on in the news, in a lot of it is what's geopolitically going on and how it affects the markets. The investment markets drive a lot of the economy, obviously. The economics of our country drive the job market. It drives the inflation, all these different aspects, the important things that really affect all of us. And right now, the whole problem here with this Iran war that's going on, and the price of oil obviously has a very huge downstream effect to all of us. When you pull into the gas station, I think that's kind of the conversation, when you have at a very basic level with people, when you're out there recruiting people, you are aware of it. I think we're all aware of it, kind of how that affects people's daily lives, and so when you have that background information, that this war that continues, it seems like it's going to be a never-ending war. I don't think the U.S. had any kind of indication how this was going to drag on. It started back in the end of February, and now we're into the end of July, and it's going on, continuing now into August. So the big news today is oil prices are back up again. WTI, West Texas International crude oil, is around $85 to $85, or $84 to $85 a barrel, and Brent is around 90. Brent is in the North Sea. It's a thicker oil. It gets pulled up, and it's a different oil to process. It's a little bit more expensive because it's harder to get to. So that's kind of why you see the differential price there. It's 90. It's usually about $4 to $5 more a barrel to process, pull out of the ground. And so that's kind of why you see the pricing is a little bit different. But anyway, the oil is back up substantially today, basically because Iran, again, attacked some U.S. bases unprovoked. And then, of course, President Trump reacts and said he's going to attack and hit Iran hard again, so militarily. But here's the truth of what's going on. And you're only going to hear this here on Tim Talks. You're not going to hear this on CNN. You're not going to hear this on Fox. So don't watch all that stuff, because you're only going to hear the truth right here. Is the U.S. has lost the war. U.S. cannot win this war. It's not a war you can win, because I don't know if you've ever read the book Machiavelli. It's a 17th century book on war. And The only way you can win a war like this is you got to put boots on the ground. You got to go in and you got to wipe out everybody who's running their political machine and their army. And we don't have the willpower, the political willpower to do that right now. It's not acceptable by our country, by our political um, mechanisms, our Congress, our House, our congressional people. They're not going to vote to do that. So we've already lost this war. We just don't even know it. This war is just going to trickle on for a while. You can't win a war with boats, airplanes in attacking that way. You got to go in, as Machiavelli has pointed out, over centuries and take out all the leaders and the power and all that, and replace them with some kind of leadership in a government that is run by the people. And so that's not going to happen. So this is going to continue to go on. Iran will win this war because they control that bottleneck there called the Strait of Hormuz. And so oil will be their bottleneck or control of us in the Western countries. And so oil is going to be kind of in that floating range, I think, of around 65 to $100 a barrel for some time. I don't know how long this could go on, but this could go on for some time. That's my opinion. Um, Also today, what's going on is the Federal Reserve, it's decision day. So they're going to decide what to do with the interest rates. Currently, at the discount, it's 3.5 to 3.75. I think they're going to sit on their hands. If the Fed would raise rates, it would cause a huge sell-off today, which I doubt the new Fed chair Kevin Walsh would do. That would put him in very, very low esteem to our new to our to the president who just basically got him appointed to that position. So I doubt that that's going to happen. Um, Chip stocks are way off. They got clobbered. I don't know if you've been watching that much, but chip stocks are way down. So Micron Technology, which is up huge, and AMD are all off. They've been taking the brunt of the pain here on the market. And because AI is obviously one of the biggest bubbles we've seen probably since the internet bubble happened. And I think that's going to continue. Some point, this thing is all going to pop, and you're going to see this big explosion in the market with all these overbought stocks. I was reading Paul Dietrich's piece the other day that came out, and he pretty much laid out this whole case, said about 10 companies represent 43% of the valuation of the S&P 500. And if you understand the overweighting of something like that, that's a huge example of if anything falls apart on those 10 companies as far as earnings or the bubble pops, the whole market is going to turn upside down pretty quickly. So we've got kind of that equilibrium there of a high concentration in these 10 companies that are going on. Last week I talked about this briefly, but there's an index buying dilemma going on in our country that so far over the last 30 years, when you buy if you got a 401k, let's say in your organization, your company, every 2 weeks you buy into passive investing through, let's say, a S&P 500 index. So you buy into an index fund, which basically invests in all the companies in that S&P 500. Those are the 500 companies that make up the S&P 500. The problem with that investing, that passive investing model, is that no matter what those companies are doing, whether they're doing well or doing bad, all those companies get a percentage of that investment. But like those 10 companies, 43% of that investment go into those 10 companies. It's not proportional to the 500 companies. So you get basically an imbalance of investing happening here again, which feeds that problem I was just talking about with that overweighting issue. which is going to cause some kind of a problem here. And, at some point, this is going to feed into our correction, which will happen, that it's way overdue in our market. So I think that is going to help us really protect our clients. This is why what we do is so important. When we have the downside protection in our models, in our investment products that we use in our IULs and in our annuities, this is why we are able to offer upside potential in the market, but also downside protection. What we do is so important to protecting families. So this just points out the index dilemma that we have in investing that has been happening for over 30 years now. And what's another thing that's going on is the baby boomer generation now is going to be taking out more money than they've been putting in. And so there's going to be a negative draw out of those index funds that's going to be starting. I was reading this is going to be starting in 2027. So this is going to be a negative pull on the market sometime in 2027. That's going to be one of those things that I think will affect the markets also. So when you put all those kind of components together, you're going to see at some point another dynamic there on the markets that's going to affect possibly a correction in the market at some point. So it just gives more credibility to what we're doing and how important it is to go out there and, number one, recruit, because we're a personal kind of, or we're a consumption kind of internal consumption kind of organization, because it gives the credibility how important it is for us to go out and recruit someone that we work with to sell, but it's also the credibility to recruit and build a team and show them the opportunity that we have, because everybody starts off part-time and build a team, and show them the tools that we have that we're going to talk about today as an example. So anyway, that's what I got for you today. Tim Talks, watch today. It's going to be an interesting one. I've got a lot of comments to make. And Alex, I'm sure Alex is going to dazzle everybody here.
I'm sure he will. Thank you, Tim, for sharing as you always do. If you guys aren't in the Tim Talks, I'll put out a link in the WhatsApp so you can just add yourself, because I think that's possible. But Tim puts out literally every single day, he sends out a market update of what's going on in the world. And it's just a great, composite of everything coming from everywhere, and kind of puts it in our terms so we can all understand it. So it's a great thing to watch and pay attention to. So we appreciate you and all of your help. And your conversation, your comments about indexing and things like that, and being in protection in our world today, and are we going to have a market correction? I think historically speaking, we've had a market correction every 8 to 9 years throughout our history. That means we have a healthy market, right? I think right now we're going on 18 years without a correction. So we're definitely in the longest running bull market of our time, which is amazing until it isn't, right? And I think that's what we have to talk to our clients about, especially the ones that are closer to retirement, is, can you afford it? Is it okay? Do you have enough? Should we take a portion and be a little more conservative and protect that? And so with that, a lot of times we use annuities. You guys know, and Jody wanted me to just kind of talk briefly, like, third grade level about annuities, and then we'll turn it over to Alex and let him talk. But when we're doing an FNA, for all of you that are new, an FNA is a financial needs analysis. So that's when we take a snapshot of everybody's entire picture. Like, where are you? Where do you want to go? And then we help you put that plan to get there together, right? And to help you reach your goals and dreams. But when we do that, we're looking at two different things. When we're going through that analysis and we're saying, what can we help them with? What are the two types of money that we're looking at inside those FNAs? Anybody know?
Monthly money and lump sum money.
Monthly money and lump sum money, right? I might have trained Gail. I'm just kidding. Think I've trained most of you guys too. But monthly money and lump sum money, right? And what can we do with that? Typically, monthly money is going to be like an IUL or a term or, some sort of systematic investment. Lump sum money is going to be, what do we do with this? Is it an annuity? Is it WFS? Is it Cal Choice? Like, what do we do with this lump sum of money? Lump sum obviously is just a bucket, right? And then we make those decisions from there. James, do you have something to say? You're muted. You're muted. It looks great, but we can't hear it.
No, keep talking, keep talking. I just wanted to throw something out there for everyone, a little mind opener before you give the stage to Alex, if I may, if that's okay.
Yep.
Cool.
Like now?
Whenever you want, whenever you're done talking.
Oh,
you keep
okay.
going.
I'm never going to be done talking. I'm just kidding. So today we're talking about lump sum money, right? We're saying if you have this lump sum, where do we want to put it? What are our options? What are our choices? You guys know how much I love the Nationwide and Annexus New Heights annuity. I use it quite often, especially when I'm guaranteeing income for people's retirement. When they're at that point in their life and at that point in their career that, Jody says all the time, they've climbed Mount Everest, which is amazing. Now they got to get back down, right? That's what this annuity, the specific one, in my opinion, is best for. So, James, if you want to introduce Alex, I'm happy to allow you to unmute and do so.
Yeah, absolutely. Hey, good afternoon, everybody. Hope everyone's having a fantastic hump day here on this amazing, hot and steamy hump day. No, I just want to throw out there, guys. Again, Alex is an amazing guy. I've had the opportunity of working with him multiple times on many cases with annuities, and they have Annexus. Again, they are the Carroll Shelby, the Ford Mustang. Only 3% of licensed representatives get access to an Annexus annuity. So we are in a prime seat with our partnership with Annexus through Integrity to be able to have access to those phenomenal solutions to provide clients. And over the weekend, I was just really curious, and sometimes I take deep dives into just AI, Google, Chat GPT, whatnot. I'm sure many of us on the call do. And I was thinking, how much money is sitting out there in abandoned 401k accounts that needs to get rolled over? And believe it or not, there's over $2 trillion, $2.1 trillion sitting in approximately, let me get the exact number because I want to be right here, in approximately 31.9 million 401k accounts, 31 million, 32 million 401k accounts sitting out there that have been abandoned, meaning that people have, but they haven't moved. So they're abandoned. They're just sitting there. And like Kimberly said, hey, it's great that we're in an 18-year bull market. Everyone's 401k looks great until it's not. And so right now is a great opportunity to do a lot of easy rollover, guys, and make a ish ton of money to be able to do well. So that's all I wanted to say. Thank you.
And with that, thank you, James. I'm going to introduce you to Alex. So, Alex, take it away. The rest of the call is yours. Take as much time as you need, and if we have time at the end, maybe we'll open up to a couple of questions. But I am ready for you when you are, and I'll allow you to share as well. So,
Awesome. Thank you so much, Kimberly. I appreciate the kind words. James as well. I mean, you took some of the words out of my mouth. These statistics are
you stole your show.
Exactly. You stole my show. I've got a few other stuff for you guys, but everyone on this call, right? Think about that. Think about those numbers. And then think about these. There are, in an average American's lifetime, they have over, on average, actually 12 jobs in their career, right? 12 jobs on average, right? Think about this. The last 5 years, there has been 12,000 people turning 65 every single day. In the next 5 years, there will be 12,000 people turning 65 every single day. Why I bring up those statistics, to piggyback off of what James said, is that the opportunity you all have at HGI to secure your network, your family, your friends' retirement, to secure their retirement with confidence is massive. It's huge. It's never been bigger than right now, right? So take advantage of this. Take advantage of the fact that people need a retirement income. They need to preserve their retirement. They need to preserve their lifestyle across their entire retirement, but also take advantage of the fact that you joined a company, specifically HGI, that has products that only 3% of any, not only insurance agents, financial advisors, securities registered, FINRA registered financial advisors have in this country. Your Merrill Lynch, your Wells Fargo advisor down the street from you doesn't have access to these solutions. HGI does, right? Thankfully, due to integrity, because we're an integrity company as well, we're partnered with HGI to help you guys secure your client's retirement. So take advantage of that. And remember, when I'm going through this solution today, I want you all to just keep reminding yourselves in the back of your head those statistics that James brought up. That's a staggering number regarding 401ks. And the statistics, the facts that I just gave you all, right? Remember that, think of those opportunities you have and start thinking of people, right? I'm going to go through some examples, but start thinking of people in your network, in your community that you can use these solutions for. Today, now that we got past all that sort of stuff, I'm going to go over our most popular solution, not only at HGI, but in our entire across all of our distribution channels, right? This is Nationwide New Heights Select 9. This is a fixed indexed annuity that has a guaranteed lifetime income rider. This is income your clients can't outlive, right? The most popular income solution at HGI. And oh, by the way, I'll let you in a little secret that's not so much a secret anymore since we did announce it on the main stage. These guarantees are only getting better on August 1st, right? You're guaranteeing your clients more income on and after August 1st. So super, super exciting, right? Not only is this the 8-time #1 selling income FIA from 2018 to 2025, this is a super simple and effective story, right? 30, 9.5, and 12. If you all can remember those three numbers, I truly believe you're 80% of the way there to mastering this solution, right? 30, 9.5, and 12. That 30 is a 30% income benefit based bonus that's immediately credited on day one. Your client's $100,000 turns into $130,000 day one, right? Now, what happens after that? That's where that 9.5% roll-up comes in, right? Every single day for the next 12 years, your client gets a little piece of that 9.5% credited to their income benefit base every single day. This is the hardest working contract you can offer your clients. And then by year 12, because the 9.5% roll-up goes for 12 years, if your client doesn't turn on income before then, their income benefit base is guaranteed to be 380% of their original premium. So if you put $100,000 in today and your client waits 12 years to turn on income, their income benefit base is guaranteed to be $386,000. And I apologize, we've got some motion sensor lights in our office. $386,000, right? Here's the real nice thing though. They don't have to wait 12 years to turn on income. It's a 1-year minimum deferral. Your clients have the flexibility to turn it on when they want and retire on their terms. So remember that 30, 9.5, and 12. The other nice thing, August 1st, that 9.5% is going to 10. Your client is going to have 30 and 10 for 12 years, right? That 380%, that's going to be around 400. I don't have the actual numbers yet. All of that gets released on 8/1, but that guaranteed growth is going to be around 400% by year 12. Think about that, right? That's a 400% bonus in 12 years. It's going to be 380 if you want to wait 10. So 30, 10, and 12 starting on 8/1. Now, for my visual learners out here, right? You probably have seen this before. Maybe if you're a newer partner on this call, this is a great chart to look at. This goes through the 30 and 9.5 across a chart for those first 12 years. $100,000 at 60 years old. That 30% bonus, that's the green bar you see at the bottom. And then that steadily increasing blue line, that's your 9.5% roll-up, right? You can see it flattens out at year 12. What if I told you that this is your client's worst case scenario? Worst case scenario, your client's getting 30 and 9.5 for 12 years, no matter what the market does, right? This is guaranteed. That advisor that your client works with, securities licensed, they're forbidden to use the word guaranteed. They'll lose their licenses. They'll lose their practice. As an HGI partner, you can say those words guaranteed for this solution, right? But this is your worst case scenario. Look at this, right? This gold line, that's index performance. I'll put it to you this way. If that gold line ever goes above that blue line, which you can see happens multiple times over not only the 12 years, but after, my client gets an income increase the very next paycheck, the very next month, right? They don't have to wait another year for that to happen. Because we're tracking these values daily and they're getting crediting every single day, their income increase happens the very next month. And you'll also notice that gold line never stops, right? When you think about this solution, it's a lifetime income rider. Clients are, as they should, be planning to have this solution for 20, 25, 30 years, right? Their entire retirement. Well, that index performance is tracked for the entire policy. If at any point that gold line goes above the current value, my client gets an income increase the very next month. They don't have to wait. So remember, the 30 and now 10 are your client's worst case scenario in the contract. Now, this is one of my two favorite slides on this deck, right? I'm very passionate about this solution. I truly think it's not just like any other income annuity. I think you're putting one more dollar in your client's pocket. And this pretty much proves that to a T. We do something called crediting on gains to date, right? This is important because, like I said, it helps your clients retire on their terms, not just on the anniversary date. Let's say I'm the advisor or the HGI partner and Kimberly's my client, right? And she comes to me and she says, Alex, I need an income annuity. I'd like to see what you can offer. I use Nationwide New Heights Select, right? Kimberly purchases that policy, and 2 years and 6 months into the contract, Kimberly comes to me and says, Alex, I'm ready to turn on income. Okay, great. Because we do something called crediting on gains to date, where a little piece of that 9.5% is credited every single day. Kimberly's income benefit base is going to be the value of 2 years and 6 months into the contract. Kimberly is going to get 2 years and 6 months of that 9.5% roll up to the date she turns on income. Right? Over 12 years, that is 4,380 days. Kimberly is going to get a new high point. She's going to have a higher income benefit base than the previous day. Right? Let's look at it on the flip side. A different solution. I made the mistake of using a different product where they only credit you 9.5% on the anniversary date once a year. What does that look like? Well, if Kimberly at the same time comes to me and says, Alex, I'm ready to turn on income, her income benefit base is going to be the value of 6 months ago. She loses out on 6 months of interest. Guess where that goes? Back to the carrier. I'll be the first one to admit to you all, the carrier makes enough money, right? They make enough money. That should go to your client. You want to put one more dollar in your client's pocket. You want to do the right thing by your client. This is the solution for that. You're putting one more dollar in your client's pocket compared to the carrier. As you can see, that math is pretty easy. You get one credit on the anniversary date over 12 years. That's 12 opportunities to get a new income benefit base, a higher income benefit base than the previous year. Continuing to talk about crediting on gains to date. Not only do we do that on the income benefit base, we also do that on your client's death benefit, right? Why is that important? Well, let's say you're in a 1-year strategy term, right? It's Wednesday, July 29th. Your policy went into effect today, and you're in a 1-year strategy term. So you get crediting on your index performance July 29th of next year, right? But let's say 9 months in, your client passes away. There's still 3 months left of that strategy term, right? Any other carrier, my experienced partners on the call, you know how this works. You're in between strategy terms, your client passes away, their death benefit is the previously credited amount, right? 9 months ago. with Nationwide or any Annexus solution, if your client passes away 9 months into a 1-year strategy term or any strategy term at that point, your client gets all of the interest from the index performance credited to the death benefit. When your clients need you the most, are you going to deliver the most? And by crediting on gains to date, not only on the income, but the death benefit as well, you truly are. So keep that in mind when you're looking at different solutions, right? Remember, you are going to give your clients every opportunity to have $1 extra in their contracts with any Annexus solutions, but specifically with Nationwide on the income and the accumulation. All right, we got some client case scenarios. Everyone knows an Alice. You know her if you've been on my presentations before, but you also know her in your community, right? She's 60-year-old. She wants single income, right? $100,000. In 10 years, that guarantees her $17,000 she can't outlive, right? That's guaranteed for the rest of her life. Not only that, but let's say she passed away by age 80. She has a legacy of $488,000. All in, that's a total return of $686,000. Now, that legacy, you all probably know what I like to refer to it as. That's your client's love money, right? Love money. If they have a loved one, a loved cause, anyone or anything they want to leave their money to, that's that money. That's the amount that they're going to leave, right? $488,000 to her beneficiaries. That money could pay for college for her grandchildren. Maybe pays her children herself, right? Whatever it is, that's that amount. Keep that in mind when you're looking at different illustrations across different companies. They may guarantee you an extra $1,000 a year, $2,000 a year. When you divide that by 12, that's only a few extra $100 a month, if that. Is that extra $100 worth it for them to deplete your client's death benefit in every single scenario? Probably not, right? Keep that in mind when you're looking at different income solutions. So obviously works with individuals, right? Works just as well for the joint income option. And actually going to go over something that's unique with Nationwide and qualified money. But this is Mike and Sarah, 62 and 60 years old. Like Alice, they purchased an income annuity with Nationwide New Heights Selected for $100,000. And in 10 years, they start taking their income and it's $14,981. This is guaranteed for both of their lives, right? As long as one of them is living and the contract's open, it's guaranteed for the rest of their life. Now, it's a little bit less. We all probably know that because with insurance carriers, if you guarantee income for 2 lives, they're assuming that the contract is going to be open for a longer period, right? So that amount's going to be a little bit less. It's still guaranteed income for the rest of their life, rest of both of their lives, right? But let's say they both pass away by 80 and 82 years old. They've taken a total income of $150,000. They have a legacy or love money of $354,000. And all in, that's almost a $500,000 return off a $100,000 purchase payment. Pretty amazing. Now, this next scenario may be a little bit higher level, but I always love to talk about it. And this is one of the many times in this call, I'm going to say, if you want more information or you have questions or you think you have a scenario with this, you need to reach out to myself. You need to reach out to Dee. We are more than happy to help you and discuss this if you have specific scenarios. But Nationwide is a mutually owned company, right? They have something because they're mutually owned and they're annuitant driven. They have something called spousal protection. And spousal protection is interesting. And it's unique to Nationwide because not only can you guarantee income and do a joint lifetime income with qualified funds, you can actually add the spouse as a co-annuitant with your client's old qualified money. And what do I mean by that? Well, your client has an old qualified account. How many owners can be on a qualified account? 1, right? Think of it as your old 401k. Remember that number that James threw out before I started speaking, right? Think about that. Old 401k, 1 owner, right? Maybe it's Sarah in this scenario's old 401k. Well, Nationwide, whether you put the client's information on or not, is automatically going to add their spouse as the co-annuitant. They're going to add Mike as the co-annuitant automatically, right? And let's say they added that joint income option. So you're going to guarantee Mike and Sarah both have income for the rest of their lives based off a qualified account. But here's also a really nice thing. Because Mike is automatically added as a co-annuitant, the surviving spouse is going to have the option to take the death benefit or continue the policy. And I said surviving spouse. It doesn't matter who passed away first. Let's say it was Sarah's old 401k. She added Mike as the co-annuitant and added the joint lifetime income option, but Mike passed away first. Well, because he was named as the co-annuitant, Sarah has the option to continue the policy or take her own death benefit from her old 401k money, right? They're giving her the option. They're giving her the flexibility. Every other carrier is going to tell you, too bad. That's, we're really sorry. But since you didn't pass away, you're the owner. You can't move this policy. You can't move this contract, right? You have to continue this policy. Nationwide, they waive the surrender charges. They can give you the death benefit, even if it's the co-annuitant that passes away first. Right? There is no right or wrong answer, but you need to remember that Nationwide is going to give your clients all of the options. They're giving your clients the flexibility, right? So reach out to myself, reach out to Dee if you need more clarity on that. I think it's a great feature for Nationwide, but it is a little higher level in terms of the conversation. But please reach out to us if you need more clarity on that. If we have time, actually, I am going to go over this. I think this is a great website to use and show. I've got a few sales tools and sales ideas on that. But before we get to that, I do want to go over this, right? There's about 50, I think I saw 50, 55 people on this call. I know people like Gail, James, Kimberly on this call that are actively in the field. Hey, Gail, in the field, not only using Nationwide, but other fixed indexed annuity solutions out there. And I'm sure there's some newer partners on this call that haven't tried going out in the field and using an annuity in their practice. I think it's safe to assume at least one of you guys that I mentioned maybe have come across this in the field, in their practice, right?
It's a great product. And I was just going to say, I think this one is fantastic for distribution. And I would encourage, we do another training with Athene. I really like Athene's new product with Annexus, the BAC. I forget what
The
that stands
BCA,
for.
sure.
Yeah.
Yep.
Yeah, BCA. Yeah, that annuity for accumulation. I think that one's fantastic too.
Well, I'd love to come back on and show everyone that. I think it's a great option as well. But thank you, Gail. I appreciate it. It was great talking to you yesterday. This is a great comparison, right? This goes through, maybe you're in the field, you presented Nationwide New Heights Select, and they come back to you and they say, yeah, this is great, but I'm going to stick with my traditional income planning. Why can't I just take distribution from my traditional portfolio? I was planning on doing that my whole career. Well, let's compare the two. This is a 60-year-old client, $500,000, right? That left column, there's a traditional portfolio. You'll see that we're going to give that a 10% annual return, which we all know would be amazing if we could give our clients that, or if we could get that in our own accounts every single year. That's fantastic. But let's see how it still stacks up against Nationwide. The middle column is the income rider. That's that 30 and 9.5, right? You can see right off the bat with that bonus, it's a $150,000 head start. $650,000 is what your client starts out with on day one. 1 year in, 10% return. Great. It's not guaranteed, but hey, you had a great year. 1 year in with that 9.5% compounding annual roll-up, your client's at $711,000 guaranteed. 5 years in, $805,000, right? Not guaranteed, but you've been having a killer past few years. Nationwide, guaranteed, $1,023,000. Year 10, that advisor, that money manager's gotten you a 10% return for a decade. If any of you out there has someone like that, let me know. That'd be great, right? But we all know that that's not guaranteed. They're forbidden to use that word guaranteed, right? Nationwide New Heights Select 9, 10 years in, you're at $1.6 million guaranteed. And oh, by the way, you still have 2 more years of that 9.5% roll up if you don't turn on income at year 10. But let's say, for example purposes, your client wants to start income in year 10. Well, what we're told our entire career is if you save up enough money, right, you can take 4% out every year. That should be able to give you what you need and also preserve that portfolio for the rest of your retirement, right? Well, 4% of $1.2 million is 51,000 and change, right? But remember, that's only in the first year, right? What happens if in year 11 what happens if you finally don't have a 10% return, right? What happens if it's 5? What happens if it's nothing, negative, right? The point is your client doesn't know, right? It's $51,000 this year, but next year they have no idea. It's all up to the markets, right? We've been, like Kimberly said before this, I joined, we've had this great bull market run, but we don't know what's going to happen in the next even 5 years, in the next year, right? But let's look at Nationwide on the flip side. Based off the policy age they started this and the age they turned on income, Nationwide's going to give them 5.15%. Well, 5.15% of $1.6 million is $82,959 guaranteed for the rest of your client's life. That's $31,000 more, and they never have to think about where their next paycheck's coming from or how much it's going to be, right? That's the significance of using an income rider specifically with Nationwide, guaranteeing them income for the rest of your client's life. Now, a pushback I've heard frequently, more recently, is, we get these calls where it's like, my client's very aggressive. They're a very aggressive investor, whatever that means, right? Well, and why would they ever use this? Here's a pushback you can use. This solution actually allows your client to be even more aggressive with the rest of their portfolio. Well, what do I mean by that? Well, let's say they have a $2 million portfolio, right? But they need $80,000 guaranteed for their mug, mortgage, utilities, groceries, the 3 most important things your clients need covered in their retirement. Maybe $80,000 is what they need, right? Well, if they shave off $500,000 from that $2 million portfolio, they guarantee themselves $82,000 for the rest of their life. They no longer have to worry about allocating to more conservative funds or more conservative investment vehicles because they've guaranteed it with this. They can take the rest of that $1.5 million and go be as aggressive as they want, because at the end of the day, they have their necessities guaranteed and paid for the rest of their life. So you can actually position this solution as saying, hey, by using this, I'm going to allow you to be even more aggressive with the rest of your portfolio, because I'm guaranteeing you that your necessities are paid for in retirement. So that's a really great kind of just pushback you can use for those aggressive investors, as I like to call them. Now, before I open it up to some questions, I do want to go over that website. Let me see here. As you all probably know, or most of you know, this is my Annexus, right? You need an invite to access this. We're happy to do that for you all. Just reach out to us, myself, or Dee. But this client microsite is a great tool to have and a great resource to have. This is a client-approved website. There's no passwords. There's no logins. NationwideNewHeights.com goes through everything you need to know about the solution. For anyone out there who doesn't know who Nationwide is, but if you watch TV, you've seen Peyton Manning or Saquon Barkley on a commercial. They're a household name. I always like to say with Nationwide, you're not selling 2 different things for the client. You're only selling the product, right? With any other carrier or most other carriers out there, you have to sell them the product and you have to sell them the insurance carrier. They're not going to recognize some of the names out there. They recognize who Nationwide is, right? Hey, I've got this income solution with Nationwide. Oh, I know who Nationwide is. I see the commercials, right? They know they're an insurance carrier. That's brand recognition. Now, You have New Heights Select, this tab. This goes through everything you'd want to know about the solution. You have your index and strategy options. There's 7 different indices inside of this solution. But where I want to focus on is this guaranteed income tool. 2 different calculators, right? The first one is I know how much money I have right now. I want to see how much income this guarantees me in X amount of years. Let's just say $200,000, client's 53 today, and they want to retire in 12 years. Well, based off those 4 inputs, you can tell your client they're guaranteed $35,229 for the rest of their life, and you never even opened an illustration, right? Perfect, to the point. You would come down here, an interactive toolbar. You can see what if they turn on income at 60? Okay, well, they're guaranteed $22,378. I think this is a great point to start with clients. Why? Because illustrations, as good and as informative as they are filled with landmines, right? I can't tell you how many calls I've done with partners that have asked every single question because they thought these are the questions their clients are going to ask, and they never even got the sale, right? Because they showed this illustration to their clients. There was 23 pages of different hypotheticals with thousands of different numbers, and they overwhelmed the client. Remember, we all know that we have to keep this simple. What did the client come to you for in the first place? Why are you recommending this solution to them? For guaranteed income. Hey, here it is. You're 53. You want to retire at 65. You've got $200,000. This is the number to the dollar what you're guaranteed for the rest of your life. Right? So that's the first calculator. The second one is great because this is more of like reverse engineering. It's I know how much income I need in the future. What do I need today to guarantee me that number down the line? I talked about covering your client's mug. It's one of my favorite classic quotes that we use for Nationwide. Mortgage, utilities, groceries. If that's a little too harsh for your clients, do hug, housing, utilities, groceries, or rug, rent, utilities, and groceries. Whatever it is, whatever you come up with, use something like that. But maybe it's $25,000 a year. They're 53 again, and they want to retire in 12 years. To guarantee you $25,000 a year, you're going to need to fund a policy with $141,926 today. Can you make that work? Is it something we can work with? Right? It's that simple. Right? A very common follow-up to that is actually, oh, it's only $141,000. Well, I magically remembered this extra 401k that I have, or this extra amount of $50,000 in this other account I forgot to tell you about, wink, wink. What does $200,000 get me, right? How much income can that guarantee me? It opens the door for you to have, a bigger sale, a bigger case by using this very interactive calculator. And by the way, you can send this to your clients too. This is client approved. There's no passwords. There's no logins. Really, really cool and unique. Okay. With that being said, we do have 9 or so minutes. Before I open up to some questions, I went over a lot, right? A lot of different concepts, a lot of information. My kind of closing is let us be your first call, right? If you have an annuity client or you think you have an annuity client, reach out to myself or D. Like our boss, Stephanie, said, we are very competitive, but we also realize we might not be for every single client. Let us just at least be your first call. We'd love to help and design a case for you, go over any illustrations, any questions you have, and we'd be happy to help. We are a partner of you all under integrity, and we really, really are excited for the rest of the year. So with that being said, Kimberly, I'm happy to answer some questions.
Yeah, absolutely. Let's, if anybody has any questions, raise your hand. And while we do that, I also want to make note, and I think, Alex, we've talked about this before. If you have pending business with Nationwide that has not funded yet, right, you have the ability to capture that extra bump in that guaranteed income piece, that 10% after August 1st. So I think it's August 1st through August 17th. There's a couple of forms that have to be submitted and signed and sent in, but you look like a hero to your clients if it's pending. I sent one to a text to one yesterday. I was like, hey, by the way, hasn't funded, so guess what? And she's like, oh my God, like sending like, the shouting emojis, and that's your job. But also it's really great when your clients love you more. So maybe speak to that for a quick second, Alex, about what's necessary and what's needed.
Yeah, thank you for bringing that up, Kimberly. So it's for any policies that are pending or submitted after 7/1, right? So 7/1 and after, you can get the new updated 10% roll up. You have to submit an LOI and a COD, which we are still waiting on the COD from Nationwide, but we do have the LOI. Excuse me, and we're happy to send it to you all. You just have to reach out to us. And I think I sent it to Kimberly as well. But you can take advantage of that. Now, with that being said, you have a 2-week window to do that in August from 8/1 to 8/16.
Okay.
They will not accept anything 8/17 and after. You can't sit on this for a month and then just decide that you want to get the new rates, right? With that being said, because this is going to 10%, a misconception is, what are they lowering? They are not lowering anything. They're not lowering the payout factors. They're not lowering par rates. They're not lowering anything along those lines. How I'm saying it to advisors and partners is the only thing that they're changing is your client's income, and it's increasing, right? So you have, again, 8/1 to 8/16. All signatures need to be signed 8/1 and after, right? Do not submit an LOI, COD, and updated signature form from the app from 7/29 or 7/30, right? It needs to be 8/1 and after for the date.
Awesome. Thank you. Luce, I think you were first with your question, and then we'll go to Caesar. And that's probably the only two we have time for today, but we'll see.
Yeah, my question was, I had
one little
someone that
question.
had opened an annuity a year ago,
Okay.
and I was wondering, because I was listening to the class and I already talked to her, if it's worth to go over her annuity, the one that she opened a year ago. It's just concerned about fees and penalties and everything.
Yeah, a year ago, unfortunately, is going to be too early to move. Nationwide specifically, they are a little bit more conservative regarding replacements and suitability and stuff. They like to see at least, I'd say 3, definitely by 4 years in the current policy before they consider it to be moved.
So
Thank
she
you.
have to stay with where she is. Okay.
Correct.
And the other
Oh.
thing, just from a suitability conversation, a surrender within the first year or even right after the first year is going to be very expensive for the client. So it would have to be, whether it's Nationwide or anywhere, it would have to be a very compelling reason to make that change. So, I think the one thing that we all need to remember is that at the time we place business, we do it to the best of our ability at that moment. Products will always get better. They will always change. Things will always, oh, I wish I would have, right? But at that moment, you did what was best, and that's okay too. So just remember that.
Okay, thank you.
Caesar? Yeah, you're welcome. Caesar?
Oh, thank you. Alex, awesome presentation, man. Thank you for bringing all this to us. And a quick question. You said that the transaction has to be done in July, right? And if we want the client to get access to that 10%, then is the calculator already updated somewhere that we can show the new number, or
Yeah,
just...
great question, Caesar. Everything gets updated on 8/1. So all of
Okay.
those numbers that I showed you, the deck that I used, everything is based off the 9.5%. And that's just because technically it's not even in force yet. It's not
Makes sense.
updated yet. So
Yeah. Okay. I have to say that you and Dee have done an amazing job. You know, these guys from Annexus,
thank you.
they're always there to help us and answer all the questions. So happy with you guys.
Thank you, Caesar. As always, thank you for the partnership. We appreciate it.
And Electra, we have hopefully time for both of you, but Electra and then Sandra.
Really quick. Hi, everyone. Hi, Alex.
We have another
for the training. Amazing. I do have an annuity in process. I reached out to you on
Okay.
Friday, late afternoon, asking you for an address. So I do have one in process. Do I wait until August 1st? Do I text you or email you so you can send me the LOL?
Is this, have you submitted this application yet?
Yeah, it's submitted.
Okay. Then if you know, what I would do is I would offer it to your client because there is some extra paperwork. And to go off of what Kimberly said, you look good for your client, right? It's like, hey, I got you 9.5%, but they're raising that to 10. Is this something you have to fill a few things out? Is this something that you'd be interested in, right? Position it that way because you look like Kimberly said, a hero. Maybe they're like, no, it's fine. Don't worry about it, right? But at least you're staying up to date with your client because they're going to get an email that says, hey, new 30 and 10%. And if you didn't tell them, they're going to be like, well, what's this? Why didn't you tell me? What's going on? Ask them, right? If they say no, okay, that's fine. Don't do anything. If they're like, yeah, that'd be awesome, we have those steps for you and I can send them to you as well.
And also, just to clarify, the form can't be signed or submitted prior to August 1st.
Correct.
So you can't do
Thank you,
anything until
Kimberly.
Friday. I think Friday is August 1st.
Okay, in the meantime, I will
Yes.
ask her, and then if anything, I'll reach out to you because she should be getting the check at the end of this week. They wouldn't send it directly to Nationwide, and then she's gonna forward it. So, you know, if she wants to,
Just
then I
reach
guess we
out.
have time. Thank you.
Awesome.
Yep. Thank you.
All right,
Director.
Sandra, last one.
Hi, Alex, how are you?
Sandra, I'm well. How are you?
Good. Question. One of my downlines, he wants to know if there's a cost for people to do a rollover for 1K to this product.
There is no cost to do a rollover from the old company to Nationwide. There is a rider charge for Nationwide though. It's 1.1%, but there's no cost to rolling that money over.
And they're getting a 30% bonus. So actually it's better.
It doesn't come off of the income rider, but yes, they're getting a bonus, they're getting a roll up and lifetime income. They can't outlive. So just the cost of using an income rider.
And I think just to be clear to everyone, as long as you do the transfer paperwork and it rolls over correctly and properly, if they distribute it to their checking account and then write a check, they're going to pay taxes and penalty, right?
You have
But if
60
they roll it
days.
over property, 60 days, I know, but just stay away from it because most people can't figure it out, right? So
get it
to be
in
clean,
ASAP.
just do the paperwork and let it go through the proper channels and have that happen.
Hey,
Octavio,
Alex.
I see you unmuted. I'm going to give you a quick second. I have a personal Zoom right
Thank
now,
you.
and I'm running this one, so that's why we
Alex,
can't keep going. Sorry.
They wanted to know on the Spanish side, what is the maximum age for this to happen?
For
Do
the
we have an
income
age
rider?
restriction?
78.
78? Thank you.
Yep.
Awesome. Well, guys, thank you so much for joining. Some of these questions, if you go to My Annexus and you look under the resources in the new hikes, like you'll see the agent guide, I guess is what it's called, that'll show you the minimum investment, the age, all those different things on kind of a breakdown sheet. So that's something maybe I'll show you next week on just where to get it, but it is definitely there. Obviously, Alex and his team is available as always to everyone. So we appreciate your time. We appreciate you showing up and helping us just get better and better every day. So thank you, Alex.
Thank you, Kimberly. Thank you, everyone. Can't wait to join again. Happy to do more product training. Thanks so much,
All right.
guys. Have a
Bye,
good one.
guys. And this is recorded to
Thank you so much.
YouTube. So remember that. This is on our YouTube channel, so you can watch it 20 times and send it to your people. I'll send it out on WhatsApp after.